Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back. This is episode 190 of Upticks, Real Estate Investing with Joe Nelson. Joe, thank you for joining me on the show.
Yeah, thanks for having me. Good morning.
Yeah, good morning. And, you know, it's exciting because this is my second real estate professional that I've had on the program, and I've been getting some good feedback from it. So I'll keep bringing on guests. And I know you've got a pretty unique situation of your own. And so it'll be exciting to share kind of, what's going on in Kansas City real estate, what's going on in the real estate world in general. And then maybe we'll talk about some other investment opportunities that are, again, outside of my, I'm more of a stock and bond guy. So
sure.
But first off, let's introduce kind of who you are. So if you don't mind sharing with my audience, where'd you grow up and how'd you get into real estate, or why'd you get into real estate?
Sure. Yeah. So I grew up in Kansas City on the Missouri side in the Northland is where I spent almost my entire life. I went to school for psychology and church ministry. So kind of interesting that I'm in the real estate world now. And I joined the Air Force when I was 17 to pay for college, and I'm retiring finally this summer. So I'm very excited about that after 21 years of National Guard service. And I got into real estate because it had been something that had always interested me. I'm very much, probably a lot like you, Jake, not a 9-to-5 kind of person. That doesn't fill my cup. It doesn't get me excited. I have that entrepreneurial spirit, and I just wanted to go out and be able to control my own destiny, so to speak. And so that's what I did. And it's been a crazy ride, and I've loved every second of it. Of course, there's been ups and there's been downs, but it's been a lot of fun, and I love what I do.
Thank you. And thank you for your service, by the way. We really appreciate that. Okay. So grew up in the Northland, specialized in psychology and youth ministry. So when did you enter? So how long have you been buying and selling real estate for other people?
Yeah. So I got my real estate license in October of 2015. And, what's interesting is like a lot of times dates and things like that don't stick with me very well. But like that timeline, because I think it was so impactful in my life, really sticks. It was basically October 1 is when I hit the ground running in real estate after taking my course online that fall. And I was working full time at the railroad as a mechanic at the time, actually. And I was working midnight to 8 a.m. with Tuesdays and Wednesdays off. And it was horrible. I did not like it. It was not for me. And I just had to, I was trying to figure out, this is not the life for me or that I want to live. And so I got into real estate, and November 30th, just 2 months, was my last day at the railroad. I remember it, very, very clearly. I was able to just go full time right away. I think I got in at the right time, and I do enjoy what I do, and I'm decent at it. And I know a lot of people, and I was able to capitalize on that. So I was able to jump in quick.
Yeah, good for you. So coming up on 7 years here, which is awesome. And I know you affiliate with Keller Williams. Can you explain Keller Williams a little bit for people that might not be familiar with that brand or that company?
Yeah, I can. And what's interesting is a lot of times people think that if I go to this broker or this broker, that they're all the agents at that brokerage are all the same, and that's not really how it works at all. I'm an independent contractor of Keller Williams, and so Keller Williams just holds my real estate license. My broker is there to, quite honestly, answer questions and serve as my big brother whenever I'm having a disagreement with another agent or like how a transaction's going. He's there to keep us out of trouble, to keep us compliant, to keep us legal, but really like as long as we don't break the law, and there's actually a realtor code of ethics, as long as we follow those, we're kind of allowed to operate freely and run our business as we see fit. And what I will say about Keller Williams in particular is they place a high emphasis on that. You'll never see a Keller Williams commercial on TV. Have you ever thought about that?
Good point.
You'll never see Keller Williams advertising. Now, you might see advertising by a Keller Williams agent, but Keller Williams really really does its best to just empower the agent and us as business owners. And so I've really appreciated that. A lot of times people said, why don't you leave Keller Williams and start your own brokerage with as much as you sell? Because quite honestly, my team sells more than a lot of brokerages in Kansas City, especially the smaller boutique ones. And it's just, there's a lot of value from Keller Williams. And what's interesting is Keller Williams is one, the last 2 years across the country, we've had more agents, we've sold more houses, and the highest sales volume of any other real estate brokerage in the entire country.
Wow.
The other thing is that Keller Williams is recognized as a top training company across all industries, not just real estate. They place a really high value on training. So Keller Williams has got a niche where they are very attractive to brand new agents like me 6-7 years ago, and to agents like me now who run a large team. They work for both. And so that's what's I think helped them grow so big and stay so strong.
Yeah. I didn't know that. So thank you for sharing. That's fascinating. And you mentioned a team, like you've got a sizable team going out here, Joe. So tell me about your team. How many people do you have on it, and how does that function?
Right. Yeah, it's interesting because, within the Keller Williams brokerage, then there are solo agents, there are agents that have just like them and a full-time assistant. There are teams of just a couple agents. We're what's considered a mega team. So there's 19 on our team currently. That includes 4 full-time salary admin that we, pay out of our commissions. And so I operate almost like a brokerage within the brokerage.
Right.
And, I'm able to empower my agents with, the systems and the resources and the tools that they need that they couldn't probably otherwise really pull off on their own. Because when you first get into real estate, it's like drinking from a fire hose. And we think that, if we jump on and make a couple Facebook posts, our phone's just going to start ringing. And just, you can throw a rock and hit 5 realtors in this city. So you have to distinguish yourself. And so we're able to provide that for our agents and allow them to distinguish themselves and really then even grow themselves. So like in the same way Keller Williams allows us to brand ourselves, we have our agents branding themselves. So whenever we send stuff out on their behalf, it's branded to them with their name, their picture, their phone number, their website, and that drives business to them from their sphere of influence. And that's how we then grow. About 2/3 of our business is from what we would consider sphere of influence, kind of referrals. Like I know you operate, I think, in your entire business that way. Right. In real estate, there's people who go out and buy a lot of leads, and there's people who just work with their sphere. And our sphere is our biggest opportunity for business. So we really try to empower our agents that way.
Yeah, I could imagine, especially with 19, that sphere is relatively large,
Sure.
Especially now. And I know your wife works with you. So how's that dynamic? You guys are like a power couple here, with both being real estate agents. So does she handle one aspect of the practice and you handle another, or how does that dynamic work?
Yeah, it's a dynamic, honestly, that we're figuring out every single day. I mean, she's the whole reason that I even got connected to you, right? Because her parents are clients of yours, and that's how we got connected, and have been, really thrilled to grow that partnership. So, during COVID hit. She was on a team for a while, and then she was solo for a while, and then COVID. We were like, we don't really want to mix personal and business, and hadn't even been together super long, and it was just so COVID hit. We were really just like, man, what are we doing? I had this dream because we live in Kearney, Missouri. And I had this dream to do what we call geographical farming within Kearney. So just really invest in this community and build a business here that way. But I'm not from Kearney. I moved to Kearney because of Lauren. And so because I had this team and the resources, she had the connections and the knowledge and the know-how. It just seemed to make sense. We're sitting at home, literally working from a folding table during COVID, trying to figure out how to keep a real estate business going when you can't leave the house. Right. And we just decided that made sense. So now we've been doing it for a couple years, and there's been a lot of ups and a lot of downs and a lot of bumps. And, we've had to figure out how to work together because we're both very strong-willed people. We're both entrepreneurs. We're both competitive people. And so, we've learned a lot of lessons along the way. I think we're, within the last 6 months really have started to settle into a routine or a rhythm, I guess, so to speak. And I had to just step away, and she owns that Kearney piece, and, she's doing awesome. In the matter of a year, she became the #1 real estate agent in the city of Kearney.
Wow.
And she does it by just loving on the community. I mean, she goes to 2 or 3 board meetings a week and just volunteers. And She hosts and sponsors different events that the city does. And she really just loves on the people of the city, and it's really paying off. And she genuinely does it because she loves it, not because it's just, a way to get business, although it works for that too.
Right. That's awesome. Yeah, no,
I think that's what's interesting is the people see that in her, you know what I mean? And they know that it's genuine and that she really cares. And I think that's really important. So
yeah, that's what I get from both of you guys. You're both very authentic, and it definitely shines through. So that's great. So of the 19 people, so it sounds like they're kind of running businesses within your business, but do you guys collectively have a niche? Is it all Northland? Is it Kansas City? Is it just Missouri? I mean, what's going on there as far as your group is concerned?
I don't say that geographically speaking, we have a niche. Obviously, Lauren has her niche in Kearney for sure. She knows every neighborhood in Kearney, but I would say probably a lot of our businesses in the Northland, but we have agents all across the city, and always looking to add more. We want to, diversify and get out there and get bigger. So we do plenty of business. We have most of our agents are licensed in Kansas also. We have an agent who does most of her business up in St. Joseph, Missouri. So we've kind of got all areas of the city covered. And that's what makes our team a little bit unique, is no matter who we're working with and where they're wanting to buy, we can pair them with somebody who knows that area.
Awesome. Now, and I bet you're sick of hearing this, but I have so many clients that are looking to move or looking to buy, and they're all waiting for the housing market to cool off or to crash. And so you and I had a really good lunch about this. So why don't you share with our audience kind of some of your facts and figures or your thoughts? Because not everybody, but if you've looked at house prices over the last few years, it's obvious that they're all higher. And so a lot of people are expecting a bubble to burst. And so what are your comments to that, Joe, or what should people be thinking?
Yeah, it's interesting because I get asked that almost on a daily basis. Yeah. I have this conversation almost daily. And, I would say it's a little bit like sort of trying to expect the stock market to burst, right? Mm-hmm. Like there are ups and downs in everything in life, but generally speaking, if you look over a long period of time, it's gone up over a long period of time, right?
Right.
So it's interesting in the real estate market because we all in our lifetime think of 2008, and we're just bracing ourselves for another 2008 because of the kind of numbers that we've seen. And I just do not anticipate that happening again, but I'll tell you why, not just my warm fuzzies. And we talked about this over lunch. So in 2008, you had all these builders all over across the country building houses at incredible rates and building housing. And see, here's the problem. We're entering a housing crisis in our country. There's not enough housing, not necessarily single family. I'm just talking housing in general, like beds, rooms, whatever. And so in the last decade and a half, since 2008, a lot of those builders went belly up or had to really scale back their business. And so it hasn't kept up. But it's not like we stopped having babies in our country in the last decade and a half, right?
Right.
And those babies are now young adults, right? And they're in housing. And so in the last decade and a half, housing growth has not kept up with population growth, where if we look back 50 years before that, you can see, if you look at the number of new housing compared to the population growth, they were pretty even decade after decade after decade. But in the last decade and a half, there's been a huge disparity. And so it's just a simple supply and demand issue. It's not complicated economics here. It's just simple supply and demand. And think about it this way, Jake. You would have thought, everybody thought when COVID hit, it would kill the real estate market, right?
Yeah.
We're talking about the biggest global pandemic of our lifetime, and it did not slow the real estate market. If anything, it fueled the real estate market, right?
Yeah, good point.
And it's all because of supply and demand. And so that's why I say, first of all, I don't think prices are going to burst or go down or whatever. Second of all, even if they do, like they did in 2008, as long as you could afford a payment, if you had a mortgage on it or whatever, or you paid cash and it just sat there, by 2010, 2011, 2012, we were coming out of that. Right. And now we're, back in the profit section. And so, even if it does, which I don't think it will, you sit on it long enough, it's going to be back up. And here's another reason why I don't think it's going to, because Jake, you probably study economics a lot closer than I do. I know you watch the stock market. clue
Right.
what I'm doing there. So it's like, here, like just fix, like make it work for me. But when at the beginning of this year, I looked back at the sales numbers in our Kansas City metro, and I looked at what realtors were selling the highest number of homes. And 3 out of the top 5 realtors in our entire city worked almost exclusively for hedge fund investors. What I mean by hedge fund investors is I'm talking about giant hedge funds with millions and millions of dollars in the bank. They partner with a local realtor and they say, you buy up every possible house that you can that fits within this parameter of what we're looking for. And there's literally agents in our city that are ranking among the top 5 in the entire city because they're just writing offer after offer after offer, all cash on these listings, right? Now, we're not talking about the $600,000, $700,000, $800,000 homes. We're talking about the homes that the average, American would probably buy in our market. So we're talking, 150 to 300, kind of in that range, probably. That's where we're seeing. And so somebody who's made a living growing money and understands all facets of it, multiple somebodies across our country are seeing what's happening and they're jumping into our market. I believe that if real estate was on the verge of a burst or a bubble, those hedge funds would not be pumping millions of dollars into real estate in our city. They know better. There's an expression in our industry that success leaves clues. I say that all the time to my team. When I first started in real estate, I looked at the teams and the people that were 2 steps ahead of me, and I just did what they did, right?
That's smart.
When it comes to real estate investing, success leaves clues. Hedge fund investors know what they're doing, and they're leaving clues for us. And that clue is buy, buy, buy. And so Lauren and I personally bought 2 investment properties here in Kansas City late last year. We just bought an investment property in Florida to use as a second home, vacation home / rental property, short-term rental property. So, not only am I on here saying this to you and your followers, but I'm literally putting my money where my mouth is as well, because I do see so much potential here.
Now, do you have the data, Joe? Are these hedge funds buying the homes and flipping them, or are they renting them out? And maybe you don't have that data.
No, I do. They're holding them.
They're holding them. So they're renting them out?
Yeah, they're renting them out. We sold several of our listings last year to these hedge fund buyers. They have a big property management company in place. They're buying them and they're renting them out. And to be honest with you, because they're paying all cash, again, if I'm a hedge fund investor on one of the coasts and I'm sitting on millions and millions of dollars, and I look and I can buy a 3-bed, 2-bath house for $250,000 in Kansas City and then turn around and rent that out for $1,700 a month, $1,800 a month. To them, that's a slam dunk all day, because they know not only are they collecting $1,700, $1,800 a month on that investment, right? Which over a year then is going to be what, like 8-9% interest, or is what you'd be gaining in interest if you pay cash on it, right? That's pretty decent return.
Yes,
right? We're okay with
return.
that. Now we know we're going to have some expenses, right? We got to pay a property management company. We got to, maybe put a roof on it every now and again, or like do repairs, maintenance, stuff like that. So that's not all profit. But we also know that real estate is increasing in value between 5 and 20%, right? Last year, our city saw an average of between 10 and 15%.
Wow.
So not only am I getting that rent payment that's serving as quote unquote interest, like it would if I was investing in a stock market, that's generally guaranteed, right? If it stops coming, I kick my renter out and I put another one in and they start paying, right? And the real estate market is going up. And so that $250,000 home that I bought, I know is going to be worth, $300,000 in a year,
right?
Or a year and a half. And so it's just a really, really safe bet from that perspective. And so those multi-million-dollar hedge funds are just parking their money in single family housing in Kansas City. So it's happening, and it's not just Kansas City, it's happening all over the place. It's happening all across the country.
Yeah. So this is outside my license, obviously. That's why you're on the show, Joe. Again, like, real estate, I know stocks and bonds. So it almost sounds like a dividend paying stock that's increasing in value. Now, I know you and I spoke about this at lunch. Is there a way for an individual to enter this market? So let's say they've got a well-diversified portfolio with me. They've got stocks and bonds and we trade options, but they've got some extra cash that they want to diversify with, but they don't know how, because again, I'm not a real estate agent. I can't help them in this category. How could somebody go about doing this on their own. Like a guy like me, I have a mortgage on my house and that's it. I don't know anything else about real estate other than my home. So.
Right. Yeah, absolutely. I would say first, educate yourself a little bit. Get with a realtor who knows what they're doing. And the other thing that I would say is like what's unique about what my team is trying to do right now, again, because you mentioned like there's a lot of realtors, and I actually listened to the podcast with the other realtor that you had on, and she was awesome and
Thank you.
She had great information. What we're doing that's a little bit different or unique is that we're trying to provide those options. Because here's what's happened. This is a compounding effect. There's not enough houses for the number of buyers that are out there.
Right.
So then the people that do own the homes are afraid that if they sell, one, they can't go buy right now because they're a contingent offer upon the sale of their current home. So they can't qualify. So they don't want to sell first and then go buy and be homeless and have to move twice and find a short-term rental. And they're just worried about it. It's so gridlocked us because people are so worried about being homeless, right? That they won't be able to find something.
Right.
And so, what we're trying to do is get outside the box and figure out, we have a great marketing plan and we work really hard to sell our listings. And that's kind of the traditional route. But, what I'm looking for also is investors who want to almost serve as a bridge loan or a bridge for some of these people that can say, hey, this investor will buy your current house and rent it back to you. One of those hedge fund investors I was telling you about that bought one of my listings last year, my seller got to stay in the home rent free for almost over 60 days.
That's awesome.
While they looked for something else. Now, I'm not necessarily saying we have to do it rent free. I think that investor was being especially nice, but if we can rent it back to them and let them stay put for a little bit while they go look for something else, that might be an opportunity for somebody to, rather than saying, I'm going to go out and buy and rental properties, which I think you should. I mean, I was making that recommendation to you, right?
Right.
I think you should, but that's a long-term strategy. But more of a short-term strategy is how can I park my money somewhere and allow my money to make money, and also like serve as provide a need for these clients who want to move but can't because they're afraid of being homeless. So you go ahead and buy their house, you carry it, and then you turn around. Once they move out, you turn around and sell it. Or again, if you're looking for a long-term rental, you just keep it as a rental property. You could do whatever you wanted at that point. The other option would be you go out and buy their house for cash. There's actually a big company that's doing this in St. Louis right now, and they're looking at moving to Kansas City, but they're literally they're telling homeowners that they will go help them buy another house, and they'll pay cash for it if they have to, and then you just turn around and buy it back from them once you sell your current house.
Wow.
Right?
Because
I have never seen, in my almost 7 years of real estate experience now, I have never seen as many cash offers as I have in the last 6 months to a year. I don't know where all this cash came from all of a sudden, but we're seeing it more and more. And so our buyers, even with like last weekend, I had a buyer that wrote an offer 25,000 over asking, completely waived the appraisal, took it as is. They lost out to a cash offer who offered even more. And that's happening.
Crazy.
Right. And it's happening every single day. So if we have people that have the funds that want to use their funds as a short-term investment to help somebody else, capitalize, and you make a little bit of money, this person gets to buy the home of their dreams. Like, it's a win-win. So we're just trying to get outside the box and not settle for, okay, well, you don't have all cash or you're not a strong enough buyer. Think about your 20-somethings that don't have 10, 20% down and they need to buy with an FHA loan.
Right.
You're buying with an FHA loan, you may as well just kick rocks because it's just going to be really hard, right?
Yeah.
We're working with those buyers, trying to find them something off market, trying to find a for sale by owner or something like that, right? But if they had somebody who they were a good, solid, approved buyer, and we had somebody with cash, I'll just buy the house for you. I'll sell it back to you. You pay me, X% in interest for carrying it for 60, 90 days. No problem.
Right.
So there's just a lot of opportunity. We're trying to get creative and get outside the box. So we don't I'm not okay just telling somebody, well, sorry, I guess you're stuck in your current home.
Yeah.
One, that's going to kill my business, right? But two, we've got to get creative and figure this out because there's big companies like the one I was telling you about that are going to swoop in and take the opportunity. Why give it to the big guy?
Right.
Right.
When you already know the market better, right? If they come swoop in, I mean, you guys are already in the market. Now, from an investment standpoint, there truly is, in my opinion, no riskless investment. So let's talk about some of the risks though. Like, so So if somebody were to try this out, like maybe you can outline some of the risk and maybe who should do this and who shouldn't even consider it, right?
Yeah. Yeah. I mean, I would, like you said, any investment is a risk. And I think the biggest risk is, obviously if I buy this house for you and rent it to you, or I buy this house from you and rent it back to you while you go look for something else, what if the furnace goes out? What if the hot water heater breaks?
Right.
Who's liable then? And I mean, typically with any rental, the person who owns the property is responsible for maintenance on the property, right? And so, you're taking a risk there. How do we mitigate that risk? When you buy the property, you pay, $500 and you do a home inspection and you know what you're getting into before you get into it, right? And we're not going to buy it if the furnace is not, or we buy a warranty that comes with it that will cover all that stuff and you're just going to have to pay a deductible, right? So there are ways to mitigate the risk so that it's minimal. But of course, there's no way you are going to have to get insurance on the property. And what if a hailstorm blows through and knocks out your roof? Well, then the insurance company should cover it and you should have a deductible that you'll have to pay, right? So there are certain risks, but the chances of those things happening, I think are fairly small, but they certainly could. I think those are probably the biggest risks. I don't think the risk is, well, the real estate market's just going to burst all of a sudden. Maybe I think the biggest risk there is, in my opinion, it doesn't go up 10%,
right?
But it flatlines. What I mean? I think that would be probably the biggest risk from a value standpoint. That's been my experience. And so, and another thing that I'm even personally looking at doing, if people are interested, is, then I'll be the buyer and just use what we would call a hard money lender. Mm-hmm. But if you have investors or clients that are sitting on the money and they want to put their money to work with less risk, I know the industry, I know the market. I'll take the risk and I'll just, allow them to be an investor in the process. But less risk, less reward too. like that's an expression as well, right? So
yes.
I guess I would say, like, if anybody's interested in it, there's 100 different ways to do this. And, we definitely want to mitigate the risk as much as possible. There certainly is no way to completely get rid of it. You're 100% right.
Yeah. Yeah, no, that's really good. And I think I would also add to that maybe you don't necessarily want to do this with your retirement, right? Your IRA or 401k, like this would be money you had outside of that, right? That maybe you were already, again, set up. And this would be another layer of a potential diversification, because like you mentioned, hedge funds are doing it, right? And hedge funds are traditionally, not all of them, but stocks and bonds, right? So if they're out here dabbling in hard real estate and physical assets, that doesn't mean an individual shouldn't at least consider it or look at it potentially. So
absolutely.
That's really good, Joe. And I remember, I know we're running out of time here, but to wrap up our show, you had a really good quote about when the best time and the worst time to buy or sell houses. Yeah. If we can leave our audience with that. I thought that was a good one.
Yeah. So I'll share that real quick before I do that.
Yeah,
I think you hit the nail on the head with the diversification piece, right? Like, I think as investors, we all need to be diversified. Right. I know real estate. I can invest in real estate all day long, and I have, and I am, and I will continue to do so. But I also understand real estate's not the end all be all, and that we need to be diversified. Right.
Yep.
And so we, have set up a plan with you to be where we want to be when we hit retirement age. And Laura and I are committed to, not investing all of our money every single year into the real estate market. So I do think that diversification is really important, and it does go both ways.
Yeah.
So what I told you, and I honestly, I don't even know how, like, it just kind of popped in my head one day. And I would say that the best time to invest in real estate is yesterday. And the worst time to invest in real estate is tomorrow, right? Because prices were cheaper yesterday and they're going to be more expensive tomorrow.
Yeah.
And especially with interest rates, on the climb a little bit, that's going to impact things as well. So, the best time was, yesterday. So let's get going on it.
No, thank you. That's really good perspective, Joe. And thank you so much for joining him on the show. Is there any other comments or thoughts that you want to leave our audience?
No, I don't think so. I think the biggest thing is if somebody's curious, reach out. I would be happy to chat with them and share kind of more with them. Obviously, this is a 20-minute podcast, so I'd be happy to go into more specifics. But don't be afraid of real estate. I think, if you've been so comfortable in the stocks and bonds and all that, like, the other thing I would say is, like, if you've been interested in real estate and you want to buy that second home, it's a at some point, enjoy that while you can, and have fun with it, because real estate is a fun exciting, way to invest.
Yeah, thank you for sharing that, Joe. That's a good point. I mean, I've also, just to kind of wrap up here, I've been encouraging my clients that have been looking for their second or third home that, the investment aside, if you want to make memories and go do things and enjoy it, you can't treat this as like, well, I want to get it at the cheapest possible price, because you might be waiting forever. And next thing you know, you're 10 or 20 years older and you never pulled the trigger, right? So again, all this coordinates with your financial plan and making sure it all fits, obviously. But like you mentioned, I think a big part of it is to make memories and enjoy it.
Right. And that's why Lauren and I decided to go ahead and buy this house in Florida. They tried to sell this same house 2 years ago for almost $200,000 more than we paid for it and couldn't, right? Like, that's what the market has done there. And we were just like, if we don't get in now, it's going to be too late for us. And I have a coach that coaches me on my business, and he said, just get in the game. It wasn't the exact house right where we wanted it, but we couldn't afford the exact house right where we wanted it right now, but we just wanted to get in the game, right? You got to get in the game or else it's going to be too late. And so that's a big piece of advice that I would have for folks if they're thinking about doing this.
That's really good. That's really good. Well, thank you again for joining me this morning, Joe. Certainly, if anyone has any questions for Joe and would like me to connect him, I'm happy to do so. But thank you again. Thanks for tuning in.
My
and
pleasure.
Joe, like I said, I can't thank you enough for joining me.
All right. Thanks, Jake. I appreciate you having me.
Thank you.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.